Hello students, we live in an increasingly global economy, you know that, right? So it is important for business owners and accounting professionals to be aware of the difference between the two predominant accounting methods used around the world, that is international financial reporting standards. As the name implies, is an international standard developed by International Accounting Standard Board, and US generally accepted accounting principle is only used in the US states. So GAAP is established by the Financial Accounting Standards Boards. So let us understand the difference between IFRS and GAAP. As we know, we have studied the concept of IFRS and concept of GAAP, right? So today let's look at the 10 biggest differences between IFRS and GAAP accounting. There are 10 differences between IFRS and GAAP. First one, local versus global, rules and principles, inventory methods, inventory write-down, reversals, fair value, revaluations, impairment losses, intangible assets, fixed assets, investment property, lease accounting. Let us see what is the difference between IFRS and GAAP one by one. First one, local versus global. So IFRS is used in more than 110 countries around the world, right, including the European Union and many Asian and South American countries. So on the other hand, GAAP is only used in United States. Understood? So that's why companies that operate in the US, that is United States, and overseas may have more complexities in their accounting. So this is the first difference between IFRS and GAAP. That is, IFRS is used in more than 110 countries. That is global. IFRS is used as a global in around the world, right? So but GAAP is used only in the United States. That is a local principles, or it is called local because only the United States are using the GAAP. Second one, rules and principles. GAAP tends to be more rules based, while IFRS tends to be more principles based. So there is a difference between rules and principles. Under GAAP, companies may have industry specific rules and guidelines to follow, while IFRS has principles that require judgment and interpretation to determine how they are to be applied in a given situation. So that is the difference between rules and principle. However, convergence projects between FASB and IASB have resulted in new GAAP and IFRS standards that share more similarities than differences. Take for example, recent GAAP standard for revenue from contracts with customers. We will discuss about this in later, and auditing standards update and corresponding IFRS standards. So IFRS 15 share a common principles based approach. So this is the second principle. So GAAP tends to be more rules based, but IFRS tends to be more principles based, because here under GAAP companies may have industry have some specific rules and guidelines, but IFRS has principles that require judgment how they are to be applied in a given situation. That is the thing. And third one, inventory methods. Both GAAP and IFRS allow first in first out, that you know, right? FIFO, first in first out, weighted average cost, and specific identification methods for valuing the inventories. However, GAAP also allows the last in first out, that is LIFO method. As you know, LIFO, last in last out, you have studied, right? So which is not allowed under IFRS. That is the difference. Here in the GAAP allows last in first out method, but IFRS is not allowed last in first out. But both GAAP as well as IFRS, they allow first in first out, but last in last out only allowed in GAAP. which is not allowed in IFRS. Using the LIFO method may result in artificially how low net income and may not reflect the actual flow of inventory items through a company. So this is a third difference between IFRS and GAAP. So here GAAP allows first in first out and last in last out, but IFRS allows only first in first out, which is not allowed in last in first out. Understood? Next one, inventory write down reversals. Both methods allow inventories to be written down to market value. However, if the market value later increases, only IFRS allows the earlier write down to be reversed. Under GAAP, reversal of earlier write downs is prohibited. Understood? So inventory valuation may be more volatile under IFRS. So here, if in case market value of particular shares or particular securities is increases, or only IFRS allows the earlier write down to be reversed. Understood? So under GAAP, reversal of earlier write downs is prohibited. That's why inventory valuation may be more volatile under IFRS. And next one, fair value revaluations. So IFRS allows revaluation of the following assets to fair value if fair value can be measured reliably: inventories, property, plant and equipment, intangible assets, and investment in marketable securities. So these are the securities, or these are the assets. Understood? So here this revaluation may be either in an increase or a decrease to the assets value. Understood? Under GAAP, revaluation is prohibited except for marketable securities. But in IFRS, which allows the revaluation, GAAP is prohibited the revaluation except marketable securities. Here in the case of GAAP, marketable securities are revaluated, but other assets, take for example inventories, property, plant and equipment, intangible assets, investment, these are not revalued under the GAAP, but IFRS allows revaluation. That is a fifth difference between IFRS and GAAP. The next one, impairment losses. Both the standards allow for the recognition of impairment losses on long-lived assets when the market value of an asset declines. So when conditions change, IFRS allows impairment losses to be reversed for all types of assets except goodwill, but GAAP takes a more conservative approach and prohibits reversals of impairment losses of all types of assets. Understood? Here, in the case of IFRS, which allows the impairment losses to be reversed for all types of assets except goodwill. Understood? But GAAP takes a more conservative approach and which prohibits reversals of impairment of losses. So both the standards allow for the recognition of impairment losses on long-lived assets when the market value of an asset declines. Next one, intangible assets. Internal costs to create intangible assets such as development cost are capitalized under IFRS when certain criteria are met. That is important. So these criteria include consideration for the future economic benefits, but under GAAP, generally accepted accounting principle, development costs are expended as incurred. Understood? Expensed as incurred, with the exception of internally developed software. For software that will be used externally, costs are capitalized once technological feasibility has been demonstrated. Understood? So if the software will only be used internally, GAAP requires capitalization only during the development stage. That's why IFRS has no specific guidance for software. That is the difference between intangible assets, difference between IFRS and GAAP. Understood? Here, in the case of IFRS, so development cost. So this is called intangible asset. Understood? Development costs are capitalized under IFRS when certain criteria are met. But under the case of GAAP, development costs are expensed as incurred, with the exception of internally developed software. But in the case of IFRS, there is no specific guidance for software. That is the difference between IFRS and GAAP. Next one, fixed assets. GAAP requires that long-lived assets such as buildings, furniture, equipment be valued at historic cost and depreciated appropriately. But under IFRS, these same assets are initially valued at cost but can later be revalued up or down to market value. So any separate components of an asset with different useful lives are required to be depreciated separately under IFRS. So GAAP allows for component depreciation, but it is not required. Understood? So here under the case of GAAP, which requires long-lived assets, that is buildings, furniture, equipment, these are valued at historic cost and depreciated appropriately. But IFRS, these same assets are initially valued at cost but can be later revalued up or down to market value. That is the difference between. The next one, investment property. IFRS includes the distinct category of investment property, which is defined as property held for rental income or capital appreciation. And investment property is initially measured at cost and can be subsequently revalued at market value, but the GAAP has no such separate category. That is another difference. Understood? So here in the case of IFRS, which includes distinct category of investment property, but GAAP has no such separate category. Understood? In the case of IFRS, which is defined as property held for rental income or capital appreciation, so here investment property be initially measured at cost but can be subsequently revalued at market value. But in the case of GAAP, there is no such kind of category or separate category of investment property. That is the difference between. The next one, lease accounting. And while the approaches under GAAP and IFRS share a common framework, there are a few notable differences. IFRS has a de minimis exception, which allows lessors to exclude leases for low valued assets, while GAAP has no such exception. The IFRS standards includes leases for some kinds of intangible assets, while GAAP categorically excludes leases for all intangible assets from the scope of the lease accounting standards. This is the difference here. In the case of GAAP as well as IFRS share a common framework. Understood? But here in the case of IFRS, there has a de minimis exception, but while GAAP has no such exception. Then what is the exception here? In the case of IFRS, which allows lessees to exclude leases for low valued assets. Understood? And as well as the IFRS standards include leases for some kinds of intangible assets, but there is in the case of GAAP, category excludes leases of all intangible assets from the scope of the lease accounting standards. So these are the 10 biggest difference between IFRS and GAAP. First one, local versus global, rules and principles, inventory methods, inventory write-down reversals, fair value revaluations, impairment losses, intangible assets, fixed assets, investment property, and lease accounting. So understanding these difference between IFRS and GAAP accounting is essential for business owners operating internationally. So investors and other stakeholders need to be aware of these differences so they can correctly interpret financials under either standard. I hope this is understood for everyone, right? If you have any doubts, you can clarify it. Thank you.